Bajaj Allianz General Insurance has reported a net profit of rupees 411 crores, up 14% from the corresponding period of last financial year. Its gross written premium increased by 25% during the same period to rupees 3,119 crores. To talk more about the company's performance and the industry in general, we have with us Mr. Tapan Singhel, Managing Director and Chief Executive Officer of Bajaj Allianz General Insurance. Welcome to the Business Standard Banking Show, Mr. Singhel.
My honor, Subrata. How are you?
All good, sir. So, how was the first quarter for the company, given this was the first quarter where we didn't see any restrictions because of COVID-19?
So I think let's talk about the industry first, overall, the impact of what's happened post-COVID, how things are moving, how the industry moves, and I'll talk about the company also a bit. So generation industry across the globe, not only for India, the big issue is the inflation. So you look at the inflation movement has happened considerably, in terms of, now how do they affect generation industry? Be it for motor claims, you would find the cost of repair would move up because of inflation. Be it health claims, the cost of health claims will move up with inflation. I mean, something simple like a factory reconstruction, all the steel prices, cement prices, with all of it moving up, the claim cost for the industry would move up. Now, when the industry does the pricing, this sudden blips, I don't think they're able to account for that. So the most interesting thing post-COVID is high inflation, and across the globe, for the entire generation industry across the globe, this would be a huge problem in terms of the claims cost moving up significantly compared to what the pricing had been done earlier. Now again, because of a low pace of the COVID times, I think growth looks very good for the GI industry. Having said that, if you look at the industry, it also has always given a double-digit growth. Even COVID times also it was growing. Now that it was a negative growth. It had some small positive growth. It was growing. So the good part of generation industry is, if I look at the way the economy of the country is going, the way opportunity is there, this industry will keep on growing well, which should be there. But the thing to worry or watch out for is the inflation impact on the generation business in terms of the claim cost moving up, and how does the industry look at pricing it going forward. I think that is what the issue is. Now, if you look at our company, I think we have maintained what we always do. We try and capture, and grow over the market, and we also try and ensure that we are able to have a very good, profitable book, because our philosophy has been companies with strong balance sheet are the ones which are able to serve customers very well. Now, if you look at, and these are publicly available data on IRDA website, the grievance ratio for a company has been least for if I may take back from the time when it was published, maybe a decade or so, every quarter has been least, and we have the highest solvency ratio, close to 350%. So a company with strong balance sheet is able to serve its customer very well. I think there's a clear correlation on that basis. So we have maintained that philosophy. So what you look at our quarter one results actually is what our philosophy has always been, to try and grow over the market and have a strong balance sheet going forward.
If you look at the General Insurance Council data, it suggests that retail health has slowed down from what we saw in the pandemic. Now, group health is the reason why we are seeing a growth in the entire health portfolio. What is your assessment of this issue? Why has retail health slowed down?
It's a very good question. Now, let's understand first and foremost group health. Now, group health is an annual contract, in most of the cases. And the price revision happens whenever the contract comes up and is due. Yeah. So as I mentioned to you, with the cost of COVID and the health claims ratio moving up because of inflation, the price correction of group health will happen. So when you look at the group health growth, you should figure out, is it more number of group health being added, or is it a price correction which has happened? Predominantly the growth is because the price correction which is happening in group health. That is why you see higher growth. In retail health, the price correction does not happen like this. You have a 3-year lock-in period which was there. So people would have to take time before the price correction would happen in retail health. Some companies have increased the price, and you see a growth in those companies, balance sheet, which are the price increase there. So fundamentally, the base effect of corona products which were there last year, one would be that. Second is the price increase, is why you see this differentiation. So it's another group health has moved up in number of policies. I think the price increase which shows a higher growth compared to retail.
Now, if you look at the data closely, we see that the general insurers have just grown by 2% year on year when it comes to retail health. But I mean, the standalone health insurance companies have done fairly well. What is the reason behind general insurers growing so slowly?
Again, we understand that if I look at the Sahi companies, as we call standalone companies, they have a certain advantage. One, in terms of agent procurement. So they don't have to, well, they need not license agents as they procure. They can work with agents which are working with life company or general insurance company, And the same is not available to general insurance industry as a whole. And insurance is still very distribution led. So any company which can create distribution at a much hyper speed will also have a growth rate which is much faster than the other part of it. And that's why it's such a good question that you have seen. The SAHI companies have a clear advantage in terms of being able to procure agents, at a much easier pace compared to what the insurance industry could have done. And that is why I think since they could build a massive distribution at a very short time, the multiplication numbers is what is clearly visible, which is there. So I think that is one predominant reason. Otherwise, you look at products, we'll look at, in terms of the offering, I think the insurance industry also offers a very, very good basket of products. It offers a very good service network. It has a very comprehensive hospital network. So on those parameters, I don't see them anywhere lagging, if not stronger compared to SAHI. But I think the advantage of distribution to SAHI is what gives them this unique positioning of being able to grow business faster than insurance.
We spoke about use and file procedure. I mean, the regulator has permitted the use and file for almost all products of general insurance industry. Yeah. How do you see that helping the industry going forward?
It's very exciting. I think it pushes innovation, it pushes customer centricity, it gives flexibility. So smart companies will be able to use it very well, and it will actually enhance customer experiences. A lot of good products would come through, at a much better speed. So I'm super excited about it.
The last time we spoke, you had told me that you are looking seriously at the surety bonds business.
Yes.
But there are certain concerns which you had, which the industry had spoken to about to the regulator and the government.
Yeah.
So have you had any clarity on that issue so far, or is there any update?
Yeah. So we have still maintained that the recovery right has to be there for any business. If you look at it, there's no recovery right, then it gets into a bit of a difficult stand, and that is why it's taking a bit of a time. From surety bond perspective, I'm very, very clear that we are set to go. I think we have also the policy wordings with us. We also have a kind of the basic framework ready, which I mentioned to you last. And this clarity has to be there. Otherwise, you run into a business in which you have no recovery rights or a civil suit, which takes a long time to be able to fulfill that. Then from a risk perspective, it is not appropriate. I think we have raised it to the government and the regulator on these points and mentioned about it also. By the same time, we're still working with reinsurance, looking at what is the next alternate best method that we can look into it. So it's something that we're not leaving so easily. But at the same time, yes, on a very fair basis, the demand remains, the recovery right has to be very clearly established from an insurance company perspective.
There have been some talks with the insurers that the obligatory cession that general insurers cede to GIC rate, that can be done away with. What is your view on that?
See, the issue is not about cession. The issue is about the insurance industry getting the cost they incur for procurement of business. So it's not an obligatory cession. It is the kind of commission which gets paid on obligatory cession is much lower than the cost incurred by insurance company for procurement of business. So in a way, for that particular business, at day zero, an insurance company makes loss. I hope you understand, Subrata. So it is not about obligatory cession. It's about, let's say this obligatory cession is about, let's say, whatever percentage, and what you get as the cost, for placing that business is lower the cost you spend on procurement of business. So day zero, you're losing money on that, and that is what the demand has been. That either it has to be on a fair play basis in terms of the cost spent by insurance company that has to be compensated for in the obligatory situation, or do away with it. Why should there be a position in which insurance company loses money, by placing an obligatory situation? That is what the issue is.
In the recently concluded IRDA board meet, they have proposed to put a limit on expense of management for general insurers. How will this impact the industry?
I have always been a champion of low expense for fundamentally, if I look at the perspective of a policyholder. How much does a policyholder pay for expenses which are not part of claims? I think that is something that should be there. So I personally welcome any move which is on limiting the expense of management, because the company in today's time with digital technology, with good distribution network, with the presence which is there, should be challenged to every year reduce the expense of management, because that is good for the policyholder.
Coming back to the company, sir, is there a plan to increase the proportion of health business in your entire portfolio?
Yes, when you have 70 crore uninsured Indian, and for a dominant company like us, not to have a plan to keep on increasing health insurance to cover every citizen of India would not be a very good thing to have. So we are very clear that we keep on pushing health insurance as we move forward.
Is there a target in mind? What kind of proportion you want?
Yes. So what we actually do is we look at different segments. We look at, let's say group health segment or government health insurance or retail, and then what segment of retail health, an HNI or a mass segment. So we have clear targets on different segments which is there. And we have very good products for each segment. So I think, we position it like that. And then we push on each of it. So that is what is very clearly established.
Also, is there a plan to grow inorganically also by acquiring any small company to increase your market share?
Two views on this. First, this is a very good question to the wrong guy. It should be asked the shareholders. Second, from a personal view, if you ask me, when I look at inorganic growth, it has to add something to the insurance company that, let's say Bajaj Insurance Company in case. If it adds distribution or if it adds, a different line of business or product of business, some specialty which is there or some special skill set, it makes sense. Just to have a macho feel to acquire companies, from my perspective, that's not the way I look at it. But obviously, it's a question of shareholders to look at it and figure out what would be their strategy on that. But I look at inorganic acquisition only when it adds value to the company. Then it's a long-term strategy that you have. That's my personal view.
That's all the questions I had for you, sir. Thank you so much for joining us on the show.
Always a pleasure, Subrata. It was always a pleasure talking to you. Thank you very much.
Thank you so much for your time, sir. Thanks a lot.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.